Good afternoon, welcome to the Market Wrap for APW, week ending 10th of September 2021. Stuart Williamson here at the helm. Now this week we're going to cover rental yields in the UK, why they're important and what's going on with them. Now what is a rental yield? If you're a landlord looking to, or becoming a landlord in the UK, then you need to look at key ways of assessing where you can buy or where you should buy. And one of those is to look at rental yield. Now, basically, if you can get anything over 6%, ideally 6.5%, on a rental yield, then that's a good buy-to-let property, because that will then cover all your costs and give you money to start repaying the mortgage, if you want to do it that way. Or if you're doing it on an interest-only basis, God forbid, that it'll give you cash flow to start doing other things. So how do you calculate what the rental yield is? Take a property, say, of £140,000. It's getting £600 rent. £600 rent times 12 is 7,200. What is that as a percentage of 140,000? 5.1%. So that is 5.1% is your yield. So ideally you want to look for something better than that if you can. So where rent's rising most in the UK at the moment? Where's going to give you the best yield? Well, according to Zoopla, and they've just come out with their September report, which is pretty up to date as rule, more up to date than ONS and stuff like that. They're saying the best yields you're going to get in the UK at the moment are in Mansfield, where rents have gone up by 10% per annum, and Wigan at 10.5% per annum. Worst places to invest, yields are down by 3.8% in London. But what do you get for your money for that? Just I thought I'd have a look around the papers and see what comes up. Well, the Zoopla website, bless it, has £450 a month in Wigan. We'll get you a 2-bed, 1-bath place, and it says 2-bedroom, first floor flat, spacious internal layout, open plan living, private entrance with walking distance of Aston Town Centre. Jolly nice. Mansfield, £625 for a 2-bed, 1-bath, stylish apartment living in a superb location, quite close to the town centre. Okay. And in London, tiny London, this is in the sun actually, tiny London flat with shower and hob next to the bed, £400 a month. The kicker is, it has no toilet. Bizarre, I know. Okay, so Zoopla have been doing the research as what gives us the best rental yields. And very simply, they say, average rents across the UK outside London rose by 5% in the 12 months to the end of July. But this, in fact, didn't keep in touch with earnings growth, which was 8.8% up, according to official figures. 8.8% increase in earnings. That's phenomenal, really. So rents are going up strongly, 5% across the board. Average rent is now £790 per month compared to £752 last July. The big growth locations were East Midlands, 6.8, the North East, 6.5, South West, 7.6, and so on and so forth. Hastings, Blackburn, Barnsley and Norwich all went up by 9%. The biggest winning cities, if you look at the tables, are Nottingham was up by 7.9% and Newcastle 6.4%, Bristol 6.3%. And the biggest loser, unfortunately, was our friend Aberdeen, which went down by 1.9% and average rent at a 573. You know, what makes all these places with the rent go up so quickly? It's basically they are the most affordable places to rent in the UK. So basically, if you look at the average rent that's paid by a single person in the UK, being 32% of pay packet, in Wigan it's 21%. So you're looking at cost-effective places to rent. Places like Mansfield, Wigan, Nottingham are all in the Midlands. No, Wigan's not. Wigan's near Manchester. But Mansfield and Nottingham are in the Midlands. You know, it's a big growth location. It's where a lot of these, as I said before, these big e-commerce distribution sites are going up. So it's a fantastic location to be investing in. Okay, on top of that, average rents in Manchester are up by 1.4% in the last 3 months alone. And so what we're seeing is this, before we had the race for space and everyone was leaving, purportedly leaving city centres, and they were going to become wastelands. In fact, the Bank of England deputy, Mr. Broadbent, what a great name, he said the race for space will support house prices, Bank of England Deputy Governor says home working will make space outside the city centres more valuable. The Economist highlighted millions of office employees now working from home around the world as a result of the pandemic. Sure, but if we're seeing Manchester 1.4% rise in rents over the last 3 months alone, over the same period, Birmingham is 2.5% up, Leeds is 1.9%, and Edinburgh at 2.2%. So, now we've got the vaccinations rolling out. A lot of younger people are wanting to get back into the cities, and a lot of workers want to go back there. They don't want to, spend 2 hours working at home. And I've got to say, I can empathise with it. 2 days working at home. When I've got the kids around, it's fantastic. It's great to see the kids, and it's a wonderful thing. But at the same time, it can get a bit irritating having the printer jamming all the time while their stuff's being printed out. So a lot of people are moving back into the city to work from there, which is a good thing. The same trends are even more apparent in central London rental market. There's a sharp rise in demand in the last 3 months. Of the 12 boroughs in inner London, they all rose by 2.3% in the 3 months of July, whereas across London as a whole, it's actually fallen for the year to date. But you understand that London is a very seasonal rental market, okay? At the moment, you've got uni students going back, and they want to go back because they want the social life, they want to be interacting with their tutors. You've got graduates starting new jobs. They've had the holidays, and now they're starting a new job. Families are going back in for the new school term, so they want to rent. And renters are looking for new accommodation after the summer. And that is all what happens in cities, and that's a big thing for London because it is such a huge city. Okay, so August is always very busy, but this last August was extraordinary. Demand levels are 80% up on a period of 2017 to 2019. So things do augur very well for the cities around the UK. Manchester, Leeds, Birmingham, the big educational centres, London. We're going to see good things going forward, and that might be a thing to think about. Why is rental growth going up so much? Because basically demand is not being matched by supply. I'll just quote you, in the year to date, rental demand is up 19% compared to last year, and its total stock of rental properties down by 13%. Okay, so that's interesting to see what's going on. Demand is outstripping supply, supply is lower. Why is supply lower? Because post 2016 and a 3% increase on stamp duty for buy-to-let investors, that's pushed a lot of people out of the market, and they're not as keen to invest anymore. From an offshore perspective, we still have good opportunities, and we have our tax-free allowance we can use. And it's just a case, if you go back to the UK, you may want to consider an SPV to set up with, because that will give you more tax benefits. But the point is, with these people exiting the market, the big companies like Lloyds Bank are buying in the build-to-rent sector, okay? The PRS area. We also see it as a buying opportunity for us, because the buy-to-let sector is a great location to put money that's lower risk. I saw the other day the Dow Jones was at 35,000. When I started offshore, I think it was less than 7. So that's quite a lot of growth. Is that too high? You can't say that of property. Property has always been a bellwether. And in summary, just on Zoopla, Grain Gilmore, who's head of research, says the rental market is moving at the fastest rate since 2016, with average time to rent of 15 days in the UK. There's been a sharp rise in demand for rental properties in recent months, especially in central city markets, signalling the return to city life as offices and other leisure and cultural venues continue to open up. So there we go. Central cities are not dead. It's a good place to buy, to let. Out of town houses are good locations. Look at post-COVID hotspots where the markets are really humming along. We can help you with that. That's our job at APW. Thank you for listening. Cheerio.